Hey, hello investors. Welcome to the channel. For today's video, I'll be showing you some stocks and some option strategies that can be used if you're trading with a small account, particularly if your account is $2,000 or less. Now, I will go ahead and give you a step-by-step walkthrough of how to implement these strategies and also how to use these stocks in order for you to get consistent income. Now, if you're new to options trading or you're looking to use options in order to get some additional income, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you some option strategies and some stocks that can be used if you're trading with an account of $2,000 or less. Now, if you're trading with such a small account portfolio, you will need to take some kind of risk. You do not need to go completely overboard, but you need to get out of your comfort zone in order for you to make some income. That being said, for today's video, we're going to be focusing on Rigetti Computing, and that ticker is going to be RGTI. Now, in order to set the basis for this video, we're going to go ahead and go into the Robinhood Advanced feature right here in order for us to go ahead and open up the options chart. Now, we're going to be going to the 1Y mark here, which is representative of the 1 year chart. Next, I'm going to go ahead and draw a line right here. Now, this trend line right here, if you follow it all the way through, you can see that Rigetti Computing has a very strong support around the $12 price. And the reason why it has a very strong support, you could see that it's touched the line several times throughout about an entire year. So we're going to go ahead and use the $12 price for the basis of this video. Now, let's go ahead back to Rigetti Computing. Now, you guys know how we do it. We like to go ahead and get down and dirty with options. So we're going to go ahead now to trade RGTI options down to the bottom for us to open up our options chain. Now, for those of you new to options or new to my channel, this area down here in its entirety is representative of an options chain. What the option chain does is that it gives us enough information in order for us to make a very informed decision before entering any options contract. Now, speaking of informed decision, I usually have two requirements for both my viewers and also my subscribers. Requirement number one, always make sure to do your own due diligence before entering any options trade. Quite frankly, what may work for my portfolio may not work for yours. The second requirement is going to be always make sure to have an exit strategy before entering any trade. That way, if the trade does decide to go against you, then you know how to get out. I will also be focusing on a couple of exit strategies with these option strategies today. So let's go ahead and get down. Now, we did showcase that the $12 point is going to be the basis for making this video. Currently, the price of Rigetti is going to be at $12.29. So I'm going to go ahead and show you a strategy that can be used if you're trading with a small account below $2,000. We're going to go ahead to sell. We're going to go ahead to call. And then now we're going to go ahead and choose our strike date. The strike date we're going to be using is going to be around a month because we're going to be doing monthly options with this strategy. So let's go to August 8th, and that gives us 27 days to expiration. Let's go ahead and select that. Now, what we're going to do is that we're going to go ahead and choose a strike price really close to the money. The money simply means the current share price that the stock is trading at. So we're going to be going with the $13 strike price right here. Now, with the $13 strike price right here, you're going to be receiving money because this option strategy is known as an income generating option strategy. The amount of money you will be getting is going to be 0.80 or $80. Each option contract does contain 100 shares. So you simply multiply your 0.8 right here by 100 shares, and that's going to give you $80. This first option strategy is known as the covered call option strategy. Now, in order for you to do the covered call option strategy, the most important ingredient is that you need to own 100 shares or more of the stock. That being said, if I were to trade Rigetti right now, based on the $12 basis that we just established at the start of this video, I would definitely go ahead and buy 100 shares at the current price. And I will show you why as the video goes along. So That means you have now acquired 100 shares of Rigetti at $12.29. So now you're going to be doing an income generating option strategy. And as soon as you do that strategy, you're going to be paid. The amount you're going to be paid is going to be $80 right away. As soon as you do this option strategy, you will be getting a return on your investment of 6.5%. How did I get 6.5%? You did pay $1,229 to own 100 shares. You did receive $80 as soon as you do this option strategy. So you divide your $80 by the amount of collateral, which is going to be $1,229, and that's going to give you around 6.5%. 6.5% is a very lucrative return from trading options from the comfort of your own home. So that's why I would go ahead and do this option strategy. Now, that is not the only reason why I would use this option strategy with Rigetti Computing. So let me go ahead and show you why else. Now, for those of you trading with an even smaller account portfolio than this, or what I refer to as a micro account, don't worry, I will show you option strategies that can be used, and that's going to be with our second stop. Now, there is a couple ways that this trade could go come expiration date. The number one way this trade could go come expiration date is that this share price here is going to remain below the $13 strike price that you chose. Once that happens, then you're going to keep your $80. That's money in the bank for you. That money is always going to be yours, whether you win or you not so win this trade. But now your 100 shares is going to be released back to you. Now, the way for you to make consistent income, you're going to use those 100 shares and you're going to go ahead and implement this exact same option strategy for another month. And you just keep rinsing and repeating until you're assigned. Now, speaking of assignment, that is the other way this trade could go. So, come expiration date once again, if this share price right here of $12.29 happens to be above the $13 strike price that you chose, then now, once again, you get to keep your $80. Remember, I mentioned several times that $80 is yours to keep no matter how the trade goes. And that $80, which is your premium, your credit you receive, that's what you use to grow your account portfolio consistently over time. Now that you get to keep your $80, now you're going to lose your 100 shares. But remember, you bought your 100 shares at $12.29, but now you're going to be losing it, and you're going to be losing it at the price of $13 per share. So the difference between your $13 per share here and your 12.29 here, let's just round up to 12.25. That's going to be 0.75. So you're going to get to keep your $8, and now you're going to get your 0.75 multiplied by 100 shares. Remember, we are dealing with options here. So that's going to be an additional $75 that you're going to be getting. So you do one trade, 1 month, and the amount of money you're going to be receiving is going to be your $80 here plus your $75 here. So that should be representative of around $155. Your return on investment, which is what you should be focusing on, is now going to be $155. You're going to divide your $155 by the amount of money you paid to acquire 100 shares, which is 12.29, and then that would give you an income, your return on investment of around 13%. Now, if 6.5% is extremely lucrative, imagine how good 13% is. So that is why I would choose to use this particular option strategy with this particular stock if I was trading with an account of $2,000 and below. The next reason also, just to add a little bit to it, if you did decide to spend around $1,200 of your $2,000 portfolio, that's going to be representative of only 60% of your portfolio. So you're still going to be able to have about $800 in order for you to just leave as cash or go ahead and do some other option strategies, which we're going to get into right now. For those of you trading with a micro account, this is the option strategy I will be doing, and this is the stock, or rather ETF, I will be using to do that on. And we're going to use QQQ for our next example. QQQ is the Invesco QQQ. Now, what we're going to do, the exact same thing, is that we're going to go ahead and go to trade QQQ options in order to open up the option chain once again, in order for us to do our strategy. Now, pay very close attention with this option strategy. I don't want you to make any mistake, and I don't want you to lose any money. So what we're going to do, we're going to go to sell right here. We're going to go to put right now. And then we're going to go ahead and choose our strike date. The strike date we're going to be choosing is going to be pretty much the same because we want to do monthly options on this. So that's going to be August 8th. 27 days to expiration. We're going to go ahead and we're going to choose our strike price. The strike price I'll be going with is going to be below the current share price right here of 553.55. We're going to be going below that. Now, the strike price I'll be choosing is going to be the 536 strike price right here. If you want to know my criteria for choosing the 536 strike price, go ahead and check out the video before this. That video is entitled How to Use $1,000 in Order to Trade Options with Different Stocks, and it's going to show you the criteria why I chose 536. So with the 536, that gives us a chance of profit of around 78%. And then most importantly, you're going to get paid. The amount you're going to get paid is $4.55. However, this is only the first leg of this two-leg option strategy. Now what you're going to do, you're going to go ahead to buy, you're going to maintain the put, and we're going to go ahead and maintain the exact same strike date. Now, for simplicity's sake, all you're going to do, you're going to select the next strike price right below your previous strike price or your previous sell put, and that's going to coincide with 535 right here. Let's go ahead and select that. Now that you're buying, now you're going to have to pay. The amount you're going to have to pay is going to be $4.32. Now, this too is known as an income generating option strategy. So the amount of income you will be receiving is going to be the difference between your sell and your buy. Let's go ahead. Let's hit continue. Let's hit review order. And voila. So this new option strategy that can work if you're trading with a micro account with just a couple $100 is going to be known as the put credit spread. The put credit spread is an excellent option strategy for people new to options and also people with very small account options portfolio. The reason for that is that the barrier to entry is extremely low. As I demonstrated with our first example, in order for you to do that strategy, you need to have at least $1,229 in your portfolio. But with this option strategy, you only need to have about $100 in order for you to employ this option strategy in your portfolio. The collateral you're going to need is just $100. Now, this return on investment is going to be $19. We're rounding up 18.92. So now you're going to be receiving $19 right away as soon as you do this option strategy. But what we like to focus on is our return on capital, the percentage return. So we're going to divide the $19 right here by $100 that we left as collateral, and that's going to give you a 19% return. So there you have it. First option strategy can possibly give you a 6.5 return. If you go ahead and lose the trade, you could possibly get a 13% return. If you're trading with a micro account, you could possibly get as well a 19% return. There you go. These are just win-win option strategies. Now, the first option strategy is a win-win option strategy. However, the put credit spread is what's known as a defined risk option strategy. That simply means there's a certain amount of money you could lose. In this case, it's only going to be your $100. So there you have it, investors and future investors. If I was still trading with a small account with about $2,000, this is what I would do. I'd go ahead and use Rigetti Computing in order to go ahead and do some options trading. The option strategy I would be using if I have about $2,000 with Rigetti Computing is going to be the covered call option strategy. The most important ingredient to do the covered call, you must own 100 shares of the stock. So you must first go ahead and buy 100 shares. For those of you with a micro account and you also want to use option strategies and you're also bullish, I would highly suggest that you take a look at QQQ and you take a look at the put credit spreads. Now, if you guys have any questions about any one of these option strategies and also the two stocks that we showcase for this video, just go ahead and let me know in the comments below. The next video I'm going to be doing is going to be option strategies and stocks that can be used if you're trading an account with $3,000 and below. So go ahead and make sure you guys subscribe to the channel in order to see that video. Now, for those of you that made it to the end of the video, you guys are the real investors and future investors. Now it would be a good time to, if you haven't already, to like the video, subscribe to the channel. Most importantly, I make these videos in order to put as much free content out there in order for us to help additional people make income from using options trading. So if you do know of anyone struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, we could help as many people as we can make income from options in order for them to supplement their regular 9 to 5, and eventually they may even be able to get away from their 9 to 5. Now, until the next video, keep pushing your investments.